Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, December the 23rd. Today, we got personal income and PCE. Personal income, month over month, came lower than the previous one, but still higher than expected. We expected 0.3%, and we got 0.4%. Still, personal income continues increasing. Personal spending, we got less than the previous one and less than expected. The previous one was 0.9% and we got 0.1%. Still increasing. Personal income are increasing and personal spending is also increasing. So that's bad news. Durable good orders came way lower than expected and way lower than the previous one, in the negative right now. And PCE price index year over year decreased from 0.1%, revised from, I think it was 6 exactly. So 5.5% still increasing, but not as the previous one, not as high as the previous one. And month over month, we got slightly increased 0.1%, and the previous one was 0.4%. And for core PCE, 5% was the previous one. We expected 4.7. We got that 4.7. And for the month over month, we got 0.2%. And we were expecting 0.2%, a decrease from the 0.3%, revised from 0.2%. So this is bad news, honestly. I was looking for shorts, and more income and more spending means Fed will continue hiking interest rates. So this news was 1 hour before the market opened, and then the consumer sentiment at 10 o'clock was higher than expected, and the 5-year inflation expectation and the inflation expectations were a little bit lower, but still expectations and consumer sentiment are way higher than the previous one and than expected. So this is not good news, and the market reacted accordingly. And here we got the news, we sold off, we recovered, and we again sold off into the open. This is the open. And after that, we sold off. I took the break of this pivot to the downside. And then we started to hold this blue line. This blue line is a daily level that I'm watching from CPI on November 10th, that I was mentioning yesterday that this sell-off at least should hold this level. And actually, we got a nice week, a nice bottoming week, still a big red day, but at least we were holding that level. And today I was watching this level for a consolidation. We got this consolidation, and then we started going for high of day. We broke high of day, but we couldn't break 11,000. This is 11,000. This week is 11,003 and a quarter. So we pulled back, and we are now consolidating right in the middle of the range. Actually, we are almost flat. Nasdaq is 0.09% on the red, and S&P has 0.30%. So Tesla is still going down. You can see Tesla continues with the sell-off, despite the fact that Elon Musk is trying to look for a CEO for Twitter in order to focus more on Tesla and on the technical side. But still, Tesla is quite in the bad, quite in the red. The only thing that is green today in stocks significantly is Google, 1.64%. And I don't know if semiconductors, semiconductors are also red. So Nasdaq is red, but what is green? Well, crude oil is pushing higher. Analysts are expecting, if we check this breakout, this was a nice breakout in this spot, and we are now moving higher, consolidating around $80 per barrel. And it's not energy, it's just crude oil. Natural gas is still selling off because the price cap on Europe, but still crude oil, we have to look for that, because this in the long term will affect inflation in the future. So the next level that we have to watch is this. This is a daily level that we have to watch around 83, and then we have this 88% $88 up here on the 200 moving average. So nice breakout on the daily for crude oil. Sectors, energy is having a nice day, 2.74% in the green thanks to crude oil, and technology almost flat, but consumer discretionary surprisingly is putting a green day today. We are holding more or less some levels, and we have to keep watching during the Christmas holidays how these sectors perform for consumer discretionary, and to confirm that at least we are reversing the trend that this is XLY, XLP, consumer discretionary versus staples, consumer discretionary a little bit on the green. We have to look for this ratio to come up again at these levels for consumer spending and consumer discretionary to push the market up. Until then, I think demand destruction is going to be heavy through the end of the year and starting next year, so watch out for that. Let's talk about dollar. Dollar is consolidating, not a lot of volume in the dollar and in the negative right now, but yields keep pushing. So yields are pushing again. Look at this. This is the 2-year, 1.19% in the green. We are going to focus on that one, on this pivot. This is the 2-year yield, and honestly the 2 and the 10-year yield are breaking out. If we track these, we got the breakout, we got a pullback, and we got a bull flag to the upside. We are watching again these pivots, these levels around 3.8%. The 2-year is 4.3%, and look at this. This is the short-term yield curve. This is the 2-year minus the 3 months yield curve. We are at 0%. We are not longer inverted in the shorter term. In the regular term, in the 10 minus the 2-year, we are still way deep. This is important to know. So in the long term, we are again talking about recession and maybe some sort of recovery in the long term, but in the short term, we are still, this is the 10-year minus the 3 months. Also short term, we are super deep in the yield curve, minus 0.48%. So again, yields pushing higher, and let's see 2023 what kind of terminal rates are markets pricing in. So this is the daily. We are right now, this is April 2023. We are pricing in 4.84% and looking for a breakout. And Fed's already told investors and traders that they are going to push around here. These 5% that we got. And markets right now don't trust that. They think interest rates are not going to push that high until 5%. And I think this gap is concerning. I really think Feds are going to push to 5%, and markets are pricing in a little bit lower, and that's an issue. So we will see what happens next year when markets start to think, okay, maybe we have to push. If yields break and start pushing 5%, then the overall Nasdaq and S&Ps are going to suffer more than right now. September, also looking for a breakout. This is beautiful. Look at this. We are watching also for 5% from here to here. So April 2023 through September 2023, we are expecting 5%. So we will be higher until 5, then at 5 until September. And of September, if we check the December 2023 rates, we are at 4.5. So maybe 2 or 1 to finish the year 4.5%. So this is September. So this is what is coming next year. People have no idea how the markets are going to suffer given the fact that we are going to stay at 5% interest rates for 6 months. This is going to be painful. So prepare for that and look for opportunities. Let's go back to the Nasdaq. I think we are going to close for today and until after Christmas. Today was a weird day. I think there's a lack of participation also due to the holidays. So if you did good, congratulations, but be patient, wait for next week, enjoy the Christmas with your family, with your friends. Take a time to rest from the markets, to stay away from this job that we have, traders. Enjoy the family, enjoy life, and be thankful for everything. Look at this. Are we trying to push higher? We will see. Let me check. This is 4. This is a nice wedge that we got. Look at this wedge. So this is looking good for a test of 11,000. But we will see. Anyways, enjoy your Christmas, enjoy your long weekend, your deserved rest and holidays with the family and your loved ones. And I will be here on Tuesday for you and for all the people interested in knowing how the markets trade and how the markets react to news. Thank you for staying there. Thank you for following me, and just take care. Thank you for your time. And if you found this video useful, please remember to click the like button and subscribe. Remember that I upload new videos every single day for market forecast, market updates, and market recaps in order for you to be up to date for the markets and Nasdaq and S&Ps, sector funds, stocks, dollar, yields. I think a lot of useful information for you to learn about the markets and to be able to take opportunities if you want to trade or invest on them. So thank you, everyone. And remember, the trading day is not over yet. I think for me, it's not worth right now to continue trading. So I'm going to just throw the towel and enjoy the time with my family. And remember that discipline and risk management are key for your success. Stay safe, everyone. Happy Christmas, and see you on Tuesday.